Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, first, the biggest headlines. OpenAI is nearing a $100 billion fundraise. Mark Zuckerberg took the stand in a social media addiction trial in California, and Andrew Mountbatten Windsor, formerly Prince Andrew, arrested. Plus, the big media deal on the table. What's to become of Warner Brothers Discovery, Netflix, and Paramount? With legendary media investor Mario Gabelli. Netflix, according to him, might not win the deal.
The stock at $80 is oversold.
Where each asset and shareholder money lands when the dust settles.
This is terrific. My clients own Warner Brothers. We own a little bit of Netflix. We're thinking about adding to it. We obviously own some Paramount, not a lot.
Then two-time Nobel Prize-winning economist Joseph Stiglitz. He's taking a hard look at the Trump administration's economic progress.
The whole idea was to bring back manufacturing jobs to the United States.
Right.
You know what's happened to jobs in manufacturing in the last year?
They're down.
They're down. They're
Right.
down. Did he succeed?
Might be a lag. Might be.
But they're down.
It's Thursday, February 19th, and Squawk Pod begins right now.
Stand Andrew by in 3, 2, 1. Cue Andrew.
Good morning and welcome to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Sorkin along with Joe Kernen. Becky is off today, so it's just the two of us, as it is. Also, we got a news alert coming up just right now. We want to show you this. The company OpenAI reportedly now close to finalizing the first phase of a new funding round that's likely to bring in, you ready for it? More than $100 billion. That's according to Bloomberg. And then speaking exclusively with CNBC earlier today, CEO Sam Altman said that he cannot comment on any potential deal, but when asked about fears that China is beating the U.S. in the AI arms race, he said concerns may be warranted.
I don't know about being underestimated, but certainly the progress of Chinese tech companies across the entire stack, and also not just in AI, but in many fields, is remarkable. The reason I'm pushing back on underestimated is it feels like every conversation I have is like, oh, China's beating us, what do we do about it? So I think people are aware of what's happening there, but yes, Chinese progress is amazingly fast.
And that interview taking place in India as these talks or finalization of the talks for that $100 billion taking place right now.
I see little wrinkles emerging as you age.
With wisdom.
I'm hoping that 50 does it for you, but we talked about that last night. We see each other a lot.
We do see each other a lot.
But it's happy birthday.
Thank you.
You're a year older.
Thank you.
I would hope a year wiser. I have high hopes for you next year.
I know 50, you think 50 years
50
old is
things happen.
A lot of things happen.
50 things happen.
50 things happen
you look
when
back,
you're 50? I'm not 50, by the way, folks. Don't age me.
No,
that
I know.
Yet.
No, neither have I.
quickly.
I'm trying to think back about what it was like when I was 50. That's tough. But today is your day, and I want you to have a great birthday. And I'm gonna really take this into account in everything we do today.
Oh, really?
Yeah, in terms of
You're going to
deferring
be just
to you.
sweeter and
I'm gonna
kinder.
nod. And I'm not gonna interrupt you if I disagree with something. I'm gonna nod and just defer to you that you have thought a lot of these things through as a young person thinks things through. And I can't always just think, well, you need to think of it my way.
But just so I understand, when I do turn 50, what happens?
This great progress that a lot of people note on Twitter that they have seen over the years as you've come closer, I think, to my viewpoint on a lot of things, there might be almost a quantum. What are you laughing about? There might almost be a quantum leap, not this gradual thing we've seen, but an actual quantum thing where you finally take a look back at things.
Say
and
all of this is a mistake.
No, just say he was right the entire time about almost everything.
Okay.
Fireworks, and I think there's big surprises coming today.
No, there is not.
Well, not big surprises, but
Okay.
the kind of surprise I think that you would like. Maybe you don't know about it. Yeah.
I don't know about anything.
Oh, you don't?
No, you just gave away a surprise, but I don't know what I've.
You don't
what I've
know
missed.
when, where, or what?
No.
Okay.
No.
Fireworks in a California courtroom during Meta CEO Mark Zuckerberg's testimony in the landmark social media addiction trial. He defended his company's algorithms and practices in the face of allegations that he put profits and addiction over teen mental health. Zuckerberg says Tim Cook was among the stakeholders he's reached out to about these concerns to discuss the well-being of teens and kids. This is a tough one, and none of us know what the answer is on how to, what kids should do. Around the world, Andrew, there are more and more places. It started maybe with something in Australia, more and more places.
Happening in Europe? Do you think it's coming here?
Should it come here?
I don't know. We should probably think about it, something, but I don't know what the right answer is.
The discourse and everything else in the world, we'll talk more about it. There is loose talk everywhere, and really incendiary, unacceptable stuff that is slander or libel, whatever the hell it is, if you write it or say it. But it is everywhere. We have lost our way in some higher institutions in educating, in my view, our youth, because I look at some of the stuff that some of the conclusions that they come to, and we've missed something somewhere along the way. I'm thinking about Colombia, some of the things we saw. All these people die in Iran. Not a single person is anywhere on an Ivy League campus protesting against that. They didn't even know what they were protesting half the time with Gaza, and yet they were there. And do you see how they've been molded into?
And so the question, therefore, is that about social media, though? Is that about education?
It's not.
Is that about what are we talking about?
I don't know. You would know more about how these kids got this way than I would. But number one, you're younger, and number two, some of the people that you don't immediately condemn are, I think, responsible for some of this on the far left.
Andrew Mountbatten Windsor, formerly known as Prince Andrew, has been arrested on suspicion of misconduct in public office. Police told the BBC that Andrew, the brother of King Charles, is in custody and officers are carrying out searches at his address. The arrest coming after police said they were assessing a complaint over the alleged sharing of confidential material by the former prince with Jeffrey Epstein. Andrew, who turned 66 years old today, also his birthday, I did not know, has denied any wrongdoing.
His birthday's not going so good.
I'm going to knock on wood and hope mine is a little bit better.
Happy birthday, Andrew. Come with us. That's harsh. I'm not expecting anything like that.
You can just call me Prince Andrew.
I could. And we have a surprise for Prince Andrew. Oh, you don't. That's right. No one wants to
call me Prince Andrew today.
Okay.
Of all days.
You're right.
The guy was just arrested.
He's not. He's Andrew Mountbatten. He's not Prince Andrew.
Well, he was Prince Andrew,
formerly known as Prince. Which, remember, anyway. Happy birthday, Crullers, Daily Provisions. They got, and even
they sent over some donuts.
I have an early birthday gift because there's a donut, or there's a bacon one.
They got you a bacon one. Danny Meyer, thank you.
Yes,
and the Daily Provisions folks.
That is awesome.
These are my favorite, by the way. Do you know that? These are my favorite.
So what, on your birthday?
I go this way.
I know, but on your birthday, what are we talking? How many would you?
Oh!
Is my bacon donut on the floor? Stack. How many will you have?
I don't know. Now I feel sad and bad.
Will you have 3?
No, just.
Remember Krispy Kremes? What was your record?
Oh.
What was your record?
30-second rule. 3-second rule. Come on.
Yeah. Pick that up.
Grab them.
I have 3 dogs. God knows what they do with their mouths.
Oh my God. Grab them. I'm not joking. You should have those.
I'm going to. What was your record on the Krispy Kremes that day? You were up to 9?
Years ago.
It was a couple years ago. You were
years ago.
9.
I might have had 9 donuts or something like that.
9
a day.
Donuts. And you were flying.
I was. Thank you, Joe.
Cheese will be next.
Coming up on Squawk Pod, a wide-ranging conversation with legendary media investor Mario Gabelli, where Warner Brothers Discovery lands in the Paramount Netflix fight, the future of our own parent company Versant, and of course, what's really going on at MSG as the company's board explores splitting up the Knicks and the Rangers.
You basically have 2 assets, they're totally different. Can they then sell a piece of RemainCo, which is, let's say, the Knicks, and the minor league, the other league they have, I don't want to call it a minor league, and can they sell a piece of that the way Bob Kraft did of the Pats? And that is, what he did was terrific, and that's another option for them that they don't talk about.
Gabelli, an MSG investor, joins us next. Welcome back to Squawk Pod. Here's Joe Kernen.
Shares of MSG Gaming, MSG Sports are gaining ground. And yesterday, the company's board said it's exploring potential spin-off to split its New York Knicks and New York Rangers business into two publicly traded companies. Joining us now with his insight, billionaire and value investor Mario Gabelli, as well as a shareholder in MSG Sports. And we're going to get to you on all the latest developments with Warner Brothers as well. But you can start with this, Mario. Does this make sense for you?
Thank you, Joe. Good to see you all, and what a privilege to be here. When Bob Kraft wanted to raise some money for the Pats, what he did is he sold some interest in his holdco, which meant that he didn't sell a piece of the teams. What the Knicks and the Rangers and the MSGS, Madison Square Garden Sports, announced yesterday was that they're examining under section of an IRS code 355, not relevant, that they are considering spinning off one of the splitting up the teams. Forbes has a value of about 13 to 14 billion for them. We think it's clearly 11 billion. So the value per share is north of 350, but there are other options that they can pursue while they're doing this. So what you have is the Rangers, they're having a challenging season. The Knicks tonight are playing Detroit, and we'll see how they do. So those are the dynamics there, Joe. At 350, it was up significantly yesterday. It's at around 340. We still like, because we're passionate fans, own one share for grandkids. You got to put it away.
We always talk about the valuation for most sports franchises. You wouldn't say that it's overdone at this point.
Well, short term, you have to adjust. I can't tell day to day. I mean, if we have this geopolitical issues, that would make the stock, like others, go down. But independent of that, you have 32 hockey teams, 30. There's a scarcity value. Plus, the basketball teams are going more global. And this is interesting.
You're on the record. You at this point think that Paramount's bid is superior to Netflix, and Netflix.
Well, that's a great question. We go and shift experiences, live entertainment, sports. Those are drivers. In the case of Netflix, their stocks dropped from like 110 to 80 over the last 4 months, and but we're not getting their shares. We're getting cash, but cash is adjusted depending on how much value they put in. So when I get $30 a share, the ARBs are saying if they don't bump, that is a 6%. It's actually 5.7% to a December close. If they bump to 31, it's closer to 9.5%. So the hands are the deal right now on the stock at Warner Brothers. Now the question for me is always the same. You look at the amount of content spend at Paramount. You look at the content spend at Warner Brothers, and the number they give you where they expense completely the sports dynamics, and you look at the content spend at Netflix, and you say, hey, who's going to win? And then what is the entity that's not winning? What are they going to do? And so from our end, Joe, the question is, can they cut a deal among themselves of some sort? Independent of that, at least they're starting to talk. And that was something that had not been on the drawing boards before. So, our clients own some Warner Brothers, but it's in the hands of the ARBs right now. And they're doing the dynamics, the math, and so on.
What was your point about the drop in Netflix? It was down in the 70s, actually. The drop in the shares. It's not stock anymore. So what point were you making? And why is it down? Is it down just in general on the, market action or the environment? Or is it down because people are wondering if this is a worthwhile acquisition to go after with that much money?
It's a change in the historical culture of Netflix, right, where they would, rent or lease the licenses. So what are they going to do next? The stock at $80 is oversold. However, as you point out, the concern is what are they going to do next, since they're not in the highest position to win the challenge. So this is terrific. My clients own Warner Brothers. We own a little bit of Netflix. We're thinking about adding to it. We obviously own some Paramount, not a lot. And but within the context, our bigger holding is Madison Square Garden Sports, or even John Deere, as they reported this morning. So obviously we're staying tuned. And at the moment, the WBD at $28 you get a cash return
Right.
to one of the winners over the next 10 months.
Hey, Mario,
And,
can we
I
just
don't
go back
know,
to let's go back to the garden for a second, if we could. If they split these things, how do you think it works in terms of the control share of the Dolans? I mean, one of the reasons there's never been a real premium on this stock is there's almost been a discount on the stock because of his control, family control of the company. No?
Yeah, there's no question, but it's, there's 24 million shares, of which 4.5 million are voting. They control the vote. They have the vote. But that's okay. It's consistent with league practices and so on. And you see, for example, today, the Seattle Superhawks, Paul Allen died at least 7 or 8 years ago, and they're putting that up for sale. So you're going to see a lot of interest in sports because of the live experiences, the globalization of some of these teams. But you're right, there's 24 million shares. The Dolans will probably have assuming they move ahead under Section 355 and they keep the numbers constant. The question then is the change in management. We'll figure that out.
But you expect the Knicks, I guess what I'm asking is, you don't think that both companies therefore become in play?
I would think that is not the long-term strategy. I don't fully understand the short-term tactics of why they're doing something like this. It's financial engineering 101. You basically have two assets. They're totally different. Can they then sell a piece of RemainCo, which is, let's say, the Knicks, and the minor league, the other league they have, I don't want to call it a minor league, and can they sell a piece of that the way Bob Kraft did of the Pats? And that is what he did was terrific. And that's another option for them that they don't talk about.
Rich Greenfield thinks that that Paramount should just buy the stub. He was making that case, wasn't he, Andrew? Just buy the Discovery part after it.
I know. Are we talking about Paramount?
Yeah.
Yeah, we're moving around a little bit.
We're going back to that. I'm not. I don't.
Yeah,
I don't
no.
know I'm a Bengals
kind of
fan.
a deal? You got 2.5 billion shares, 2.5 billion times $30 is 75 billion. You pick up 25 billion of debt. Whoever buys it at $30 is paying $100 billion. And so, how do you handle that? Where do you get the financing? And do you want to cut a deal for some of your content with someone? And then who doesn't win it? What are they going to look at? Maybe 6 months ago, 5 months ago, we talked about looking at Sony Pictures and looking at some others. This is not, whoever doesn't win is going to look for something.
Okay, here, you want to go into treacherous territory here?
For you.
I don't know if it's true. We'll see if it's treacherous. I want to know what your take is on Versant, the new public spinoff from NBC Universal Comcast, owner of this network.
The symbol is VSNT. It was spun off before it started trading. It was 46. Yesterday, it closed around 29.50, if I remember. There it is. Thank you.
There it is. Yep.
And basically, with 140, I'm cuffing the number, 145 million shares plus or minus a million. The stock is a bargain. The only thing I don't have a handle on is why did Comcast keep a 5-year license renewal agreement? On balance, I think Mark Lazarus is going to do a terrific job. They're coming out with their meetings and the earnings in a couple of weeks, and we'll get a better handle on the dots of the company. And that stock at VSNT, we like very much.
Go back. Hold on. What's the issue for you? You said you don't understand why there's a five-year license on which piece?
CNBC. Duh.
And that concerns you in what regard?
Well, that is an interesting question. I don't know why they put it in. Is it a safeguard that somebody doesn't come in while they're making the adjustments on VSNT to preclude it from being a hostile, in quotes, money grab by someone, because it's intrinsically undervalued if they can do a couple of things, okay? Joe, you're a golfer. Andrew is a golf watcher. I'm joking, Andrew, I don't know. And essentially, that's one of the dynamics that they have. What are they going to do with it? How are they going to leverage it? So I would have preferred that they had it completely, but I can understand, I think, what the reasons are of Roberts in terms of keeping that license renewal. I don't think it's that significant if the management stays in place and there's no challenge. I think it's like a different kind of poison pill, so to speak.
It was $29.50.
I can't hear you.
30.
It's moving higher.
It was
as you're talking.
$29.50. It's now 30.
Well, it was
$30.
higher yesterday and came down at the end of the day.
No, I saw it.
You know,
it was up,
the
up
index
this
fund
week.
sold it,
Up
and
in
you're
the
going to
last
see
week.
that. And the
But
same
who's
thing would
watching?
happen if, in fact, Netflix bumps their approach. they've got a 27.75, but the more debt they put on, the lower the cash price they were getting, or the less debt that they're putting on the spinoff, and then the index funds will be selling that. So those are the things you think about, both mechanically and fundamentally, and combine them together to make a long-term wealth creation.
So Brian didn't keep us, CNBC, but we should feel good about ourselves at CNBC. Is that what you're saying, Mario?
You should feel great about yourselves because you guys are the iconic thing that anybody in the world wants to understand when they want to understand what's going on in the pluses and minuses of the U.S. capital markets and the global markets. The fact that he did it is a question. That's all.
Okay.
All right.
Ask.
Okay. Mario, we'll get you some answers. Talk to you soon. Thanks.
Look forward to hearing them, Andrew. Thanks.
Okay.
Hope
He's
that was
always
Joe.
been brilliant.
Next up on Squawk Pod, we're diving into America's economic story. National Economic Council Director Kevin Hassett criticized the New York Fed paper that found U.S. companies and U.S. consumers are shouldering most of the tariff burden.
The paper is an embarrassment. It's, I think, the worst paper I've ever seen in the history of the Federal Reserve System. The people associated with this paper should presumably be disciplined because what they've done is they've put out a conclusion which has created a lot of news that's highly partisan based on analysis that wouldn't be accepted in a first semester econ class.
Two-time Nobel Prize-winning economist Joseph Stiglitz explains his own view of the same economy.
Where is the increase in jobs in the United States? Healthcare. Does that have anything to do with the tariffs? No.
Welcome back to Squawk Pod.
On this birthday, Andrew thought it was Wednesday. Birthday Thursday. If it was Wednesday, it wouldn't be your birthday.
Feels like a Wednesday.
Like a Wednesday, like a hump day. I'm Joe Kernen, along with Andrew Ross Sorkin, who's
And the donuts from Daily Provisions.
who did
Thanks
not
to Danny Meyer.
and Andrew did not hit a big number today. He wants to make that clear.
You were aging me.
No, I was not. I was saying that when you do hit that important number, I would expect some progress. And still,
My political views.
just in general, you can still wallow. You're youthful. You're youthful.
Trying to stay youthful.
It's wasted on the young.
Talking about crow's feet and all this stuff. Who
I
wants
did.
that? I don't want that.
You look very young.
Trying.
Becky is off the
These
well.
donuts are not going to
How
help
many
me.
do you have? You're
I think
three,
I'm up to
aren't you?
three. I'm
You're
up to three, and I just had a bite of this coconut one, which is it's a little heavier. That one. It's good.
I'm taking like little slivers of each and fooling myself into I'm not really eating. I'm going into the trough in a second.
Joining us right now is two-time Nobel Prize-winning economist Joseph Stiglitz. He's the author of The Road to Freedom, Economics, and the Good Society, and the new paperback edition is out next week, and we're thrilled to have you back on the broadcast and eating a donut, no less.
And wondering about inelasticity, if you can, $50 for a dozen donuts,
Right.
maybe. So that's
So we were just having a conversation about the economy, and I'm curious, just from your perspective, how you see it. Where are we?
Not great right now, and the prospects are that it's going to get worse.
Okay, so you are on the other side of where Joe is right now. Explain yourself.
Livornia.
Yes.
Okay.
And Joe. He's on the other side of Joe and Joe.
Okay, so there are a couple parts. The mystery for a lot of people is how come the tariffs didn't have the big effect on inflation? Economists always begin by asking the counterfactual. What would inflation have been but for the tariffs? Mm-hmm. And you remember the war in Ukraine going on and the pandemic, a big spike in inflation, and then it was coming down pretty rapidly. Mm-hmm. And before Trump arrived, the anticipation was that it was going to continue to go down pretty rapidly. It continued to go down, but very, very slowly. So the question is, what is the difference from what it would have been and what we experienced? And you look at those numbers,
Right.
and it's about $1,000 for every American family. And those numbers line up very closely with the Federal Reserve numbers that Kevin Hassett criticized on your program. Mm-hmm. So, the way I look at it, you put together lots of different pieces of data together, and they give you a picture. If Hassett were right, we'd have to rewrite all the economics books. good, for our job, but the fact is prices are affected by costs. There's no way you can get around that basic law of economics. Doesn't necessarily happen immediately, but it happens.
Joe, if it wasn't regressive, would you have a problem with higher costs for U.S. corporations, like a tax, higher costs for high-end consumers, like a tax, raise so much in tariff revenue that the deficit is going to be lower than it would have because of that?
Would have been, but the big beautiful bill raised the deficit.
But it's going to be less bad because of. So is it okay to raise money this way? People like the tax companies. They like the
no,
because it's regressive.
Because it's regressive and it's distortive.
But it might be distorting. The distortions that we've had over the past 40 years in global trade, we might be reversing some of this, or might be a reason to do it, no?
Yeah, no, he articulated a set of reasons, but he didn't think about the way the economy actually operates. Let me give you 2 examples. Okay. So the whole idea was to bring back manufacturing jobs to the United States. Right. You know what's happened to jobs in manufacturing in the last year?
They're down.
They're down.
They're down.
They're down. Did he succeed?
Might be a lag. Might be a lag,
but they're down. So very clear he didn't succeed over the last year in bringing back manufacturing jobs. Look at the deficit. Deficit, as economists look at it, multilateral deficit in trade in goods and services. We're a service sector economy,
Right.
Goods are just less than 10% of GDP. You look at that, that's up.
Right, but that's the argument that the low-end people that are affected by the tariffs are mostly goods, and the high-end people that do all the consuming, mostly through services, can afford to pay a little bit more if you call tariffs a tax.
Yeah, so one part of it is if you look at who is paying these tariffs, it is lower-end people in terms of percentage of their incomes.
In terms of that's why it's regressive.
That's
yes,
why we say it's
regressive.
regressive.
I know I had people lecturing me like I don't understand that, but yes, I understand.
So that's why it's a bad regressive. And you might say if there was some economic benefit, like on the other end, we're creating low-end jobs.
That's what Hassett says. The income's going to go up.
We would weigh that in.
Yeah.
But I mentioned the very large decline in manufacturing jobs. The decline in blue-collar jobs is even larger. And you look at where is the increase in jobs in the United States? Right. Healthcare. Does that have anything to do with the tariffs? No.
No, it has to do with people like us.
Getting old. Yeah, I mean.
Well, actually, he's the guy that has a birthday.
I have a birthday today.
Getting old. So.
Yeah.
So when you.
So the point is there's a mismatch between what they say they've done these policies, these are the results, and you look at the data, it just doesn't.
Do you think there's ever been, I'm actually curious whether in the econ circles you live in, whether there's ever been such a delta in terms of the debate about what the results say?
Well, actually, among the economics profession, there's not that much dispute. What is striking is, I was chairman of the Council of Economic Advisors. We had disputes with people from the Council of Economic Advisors in previous administration, but we had enormous respect for each other. Marty Feldstein at Harvard, Mike Boskin at Stanford, Glenn Hubbard at Columbia. There was a sense that we might disagree on the numbers, but we respected each other.
Right.
That's not true of the Trump CEA. I mean, he squandered institutional credibility in the same way that I think Trump has undermined the institutional credibility of the Fed.
Well, let me ask you. So Kevin Warsh is going to be the new Fed chairman, assuming his nomination is approved. What is your take on Kevin Warsh and what he is going to do, what he's going to be able to do?
Well, anybody who gets appointed by Trump has to bend at the knee before Trump.
Do you have to? I mean, that's the other question.
Before you get in.
Yes.
Now, you don't know what will happen after. What you do know is if you contradict what Trump wants, you will be criticized, even if Trump appoints you. So being appointed by Trump doesn't insulate you from pressure.
Right.
What has most disturbed me is some of his, what I would say, fanciful statements that AI increases in productivity are going to allow a significant lowering of interest rates. You know, there are uncertainties about the pace of AI. I don't think there's any significant body of thought that think that AI productivity increases are going to percolate into the macroeconomy fast enough to justify any significant, with any impact on rate increases. And the fact that he said that, to me, was very worrisome.
We're up against a hard break. I want to thank you, Joseph Stiglitz, for coming in. The book is called The Road to Freedom, Economics, and the Good Society.
That's Squawk Pod for today. Thank you for listening. And happy birthday, Andrew. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin, weekday mornings on CNBC starting at 6 Eastern. To get the best bits of that 3-hour TV show right into your ears, follow Squawk Pod wherever you're listening now. We'll meet you right back here tomorrow. Have a great day.
We are clear. Thanks, guys.